everyone, and welcome back to The Pulse, where we break down the latest trends shaping the real estate markets across Greater Vancouver and the Fraser Valley. I'm Brittany Reimer, and today joined again by Alan He. This month, we're also pleased to welcome Ashley Judd, who will be joining Alan and myself on The Pulse regularly. Great to have you with us, Ash. With a name like Ashley Judd, I don't know how this is your first time on The Pulse.
Oh, well, thanks so much for having me, Britt and Alan.
Today, we're filming from Westview Townhomes Central Coquitlam, a boutique collection of 24 craftsman-inspired townhomes by Trillium Projects that recently completed and is now move-in ready with spacious family-focused layouts, private rooftop patios, attached garages, panoramic views, a great backdrop as we head into the final stretches here in summer.
Absolutely, and thanks, Britt. It is so great to finally be joining The Pulse. And Westview really captures what many of the buyers are looking for today. So the comfort and the feel of single-family living combined with all the conveniences of such a well-connected neighborhood like Central Coquitlam. You're just minutes from parks, schools, shopping, the SkyTrain, and everything families really need for day-to-day life in an area that actually currently supplies very few move-in ready new townhomes.
Wow. And while summer is often seen as a quieter stretch for real estate, it's also when attention starts shifting to what fall market could bring. Buyers, sellers, and developers are all watching closely to see whether activity picks up once families settle back into back to school routines, and hopefully we start to see a little more momentum across the market.
Exactly. Given that we're filming from a townhome project in Coquitlam Centre, we'll touch on our pre-sale overview of what has been happening elsewhere in Coquitlam, at Burke Mountain specifically, where new townhome communities are much more prevalent and competition has really increased in the recent months. So with that, let's dive into the latest data and see what the numbers are telling us about the market this month.
So before we get into the housing numbers, a lot is happening on the economic front this month. So we thought it would be worth a dive into some of the macroeconomics for this month. Now, Alan, let's start with the Bank of Canada. Where did the July decision land?
Yeah, absolutely. So the Bank of Canada held its policy rate at 2.25% in mid-July, the sixth straight decision without a move. Not surprising to anybody. The bank's read is that the economy has been weak, but is showing early signs of improvement, so it is staying patient. Now, inflation, on the other hand, is cooperating too. June inflation came in at 2.8%, down from 3.2% the month before, with most of the easing coming from the gas pricing. Now, the bank does expect inflation to settle back towards 2% target into the next year. Now, the next rate decision lands on September 2nd, so for buyers and developers, borrowing costs are set to stay exactly where they are throughout the rest of the summer.
Yes, and the labor market is quietly cooperating as well. So Canada added around 18,000 jobs in June, and the unemployment rate ticked down to 6.5%. So the lowest level in about 2 years. It's not a boom, but it is stability, and stability is what households need before they feel confident in making a big move.
Yeah, that's right. Now, the trade file did heat up again this month. What should our viewers know about that, Alan?
Yeah, in late July, US President Donald Trump announced a new round of 50% tariffs on a wide range of Canadian exports, covering roughly $20 billion in goods. This list is broad, so everything from wood products and food to cement and wine, and to tariffs that are set to take effect on August 19th.
Not the wine.
Oh gosh, I miss my California wine.
Me too.
I know, hard to find those now.
I know, but our Kelowna Pulse episode, we get to just indulge every
That's
single
right,
time
yeah.
up there, and it's always good.
Yeah,
I
I-
can't
Have to go
complain.
back, guys.
Yeah.
I made the trade now. It's Kelowna wine or nothing.
That's it. Too
Sorry.
bad, Donald. We win.
Now, what makes this round different is the legal tool behind it. The administration reached for a section of the 1930s trade law that has not been used in roughly 70 years, citing Canadian policy on dairy, alcohol, and vehicles. So this is a new territory, and it makes the path from here harder to predict. Now, for our market, the immediate effect is confidence. BC's export sectors, especially wood products, are directly exposed, and trade uncertainty tends to make household and business hesitate on big decisions. Buying a home is the biggest of them all.
Yeah, and that uncertainty is definitely showing up in the National Housing Forecast too. Why don't we dive into that a little bit?
Yeah, it is. The CMHC released its updated housing market outlook in July, and the tone is cautious. So they've trimmed their growth outlook to under 1% for this year, and they now expect home sales and prices to keep adjusting lower through 2026, with activity so far this year coming in weaker than they forecast in the spring, unfortunately. And on the supply side, they see housing stats falling over the next few years as weak demand, high costs, and elevated inventories work through the system. That pullback is expected to be most visible here in BC, and particularly in the condominium.
Yeah, the silver lining is twofold. They see conditions gradually improving in 2027 and 2028, and they describe rental markets as easing, which is good news for the renters after years of tightening conditions. Now, closer to home, the construction industry is getting organized ahead of the municipal elections on October 17th. The Vancouver Regional Construction Association launched a campaign in July called Build Lower Mainland, built around three priorities: the cost to build, the time to build, and the people to build. Now, the launch brought Vancouver Mayor Ken Sim and Burnaby Mayor Mike Hurley onto the same stage. And the goal is simple: make sure construction has a seat at the table before these decisions are made and not after. Yeah, it's a campaign worth watching because those three priorities lined up with exactly what the developers are telling us is holding back projects right now. And it's something that I'm shocked is just happening now. It's like been 2 years in the making.
Absolutely. About time, right? So the backdrop to this month is steady borrowing costs, a resilient job market, fresh trade noise, and an industry pushing to build. Let's see how that translated into the pre-sale market in July. Now, okay, Britt, what did we see in July across Greater Vancouver and the Fraser Valley?
Yeah, July was another quiet month on the supply side, which is exactly the seasonal pattern that we would expect around this time of the year. 3 projects came to market, all townhome projects, and all with a deliberately small release totaling just 42 homes. Now, the headline is absorption as usual. Same month absorption came in at 50%, above the 5-year July average of roughly 29%. That is the strongest number that we've seen this year.
That seems significant, and does seem like a big jump given how slow the year has been so far. And what is actually driving that number?
Yeah, I mean, the honest answer is pricing strategy. And in one project in particular, we look at Beaumont by Polygon in Burke Mountain. They're reporting they sold 17 of its 20 released homes. It's the first opening weekend, which occurred in mid-July. So it's a pretty good number, but
Yeah.
pricing is everything.
For sure. And for this particular project, momentum was really built leading up to the launch through a strategic pricing approach. The playbook we increasingly see is the use of this loss leader strategy, so launching a small initial release at a lower price point, and this creates urgency to secure the early sales. It builds momentum before increasing pricing on future releases once the demand is established. So the Beaumont prices came in under what was previously established as the market floor, and it spurred absorptions as buyers who were waiting recognized the value. The other 2 recent launches in Burke Mountain, Towns at Burke in early June and Rockland later that month, have each reported initial sales activity of approximately 4 to 5 homes. So with 3 townhome communities competing with launches within 30 days of each other, none of this is this is unusual, this is expected. This is still a very strong volume of sales to transact in one submarket in 1 month. So Towns at Burke followed Beaumont's lead and they reduced price on their tandem style homes. They've brought them below the $900K threshold, while Rockland maintained their original pricing strategy. Both projects noted stronger buyer interest in their larger side-by-side garage homes. Now, Calmina, which launched in mid-February last year from a presentation center, saw limited initial success. They've transitioned now to a show home. The project has since adjusted pricing also to align with Beaumont's offering. They now offer their tandem 3 beds under $900K as well. So everyone's following. There's cascading impacts too in nearby markets. So we've seen in other areas of Coquitlam as well. So Westview, for example, completed this past month. They've seen strong traffic, interest, and sales activity has really spurred in the past 30 days. This is due to Burke. So buyers are shopping multiple areas. They're considering accessibility to transit, shorter drive times for areas like Central Coquitlam. Also, we have other communities in Port Coquitlam, West Coquitlam. We've really seen increased deal activity in the past 30 days also. We attribute this to the recent activity, the launches, the traffic at Burke.
Yeah, so smaller releases are helping projects create scarcity, but the strategy only works when the pricing is compelling from the start. With buyers having plenty of choice, the projects gaining traction are the ones leading with the sharp value and the sharp pricing proposition. And like on Burke Mountain, we're seeing competitors follow suit. When those pricing strategies prove effective, you just start to see it everywhere, right? It's like every geography, Langley, Surrey, people are looking at what are they doing? Like, how can we replicate it? Because everything is so scarce out there.
Yeah, and you don't have a choice. If you want to compete in the market, you've got to match it. They've seen the activity and others have to follow.
Totally.
Yeah. So fall pushes really are top of mind. The conversation across sales offices really remains consistent. So how competitive does our pricing need to be to attract the buyer attention and to drive traffic? And for how long can you actually maintain that attention before your competitors all follow suit and drop their prices?
Yeah, it's a race to the bottom.
It is, yeah, unfortunately. There's going to be particular attention on Burke Mountain heading into the fall. Polygon's planning on bringing the next phase of Partington Creek to market, and Mosaic is also preparing to launch Marigold on
It
Burke.
has to be like one of the most hyperactive submarkets, right? Like Burke Mountain, there's 10 active projects, right? Like that's a lot of inventory for one submarket, considering there's really nothing else happening in terms of launches in any other submarket right now.
Which is why it's so incredible to see the absorptions that are happening, because there continues to be more and more programs coming to market and they're still getting buyers.
Yeah.
Well, buyers see the value, right? Like these prices haven't been here. 3 years ago, they would have been paying 200 to 250K more than what they're paying for today. It's move-in ready, right? Like if all of those factors are on their side, there's really no reason not to make the move and to make the purchase. But, I think it is an anomaly because we're not seeing that type of activity in other submarkets. And a lot of it has to do with the completion timing and just the fact that maybe they're not in a position to be able to go down to that price that we know is going to see traction.
Yeah. And these aren't speculative buyers. These are buyers who've just been waiting. Now they finally see the value. There's a life change happening. They need a home, and this is drawing the attention. And when one project advertises significantly, it drives traffic to the area. It helps everybody else.
Totally. And I feel like 900K is very absorbable for two working professional who makes good living. They want a bigger space than a two-bed condo. This space feels great.
Yeah. The $1 million threshold has been a big one in the townhome space. So coming significantly under that at 900, the first-time buyers, they have that exemption on GST. I think it's a big driver in the market.
Absolutely. Yeah, that's a great data point, Ash. And what are we forecasting for the last bit of summer in August?
I'll let Britt take that one.
She'll be coming around. So August is set to be quieter still, with a single launch on the radar, Auburn, a wood frame project in Abbotsford that's releasing just 10 of its 134 homes to start. It's a strong example of the strategy we discussed earlier, a small initial release designed to test the market, generate early momentum, and build some confidence before bringing forward the remaining inventory. It's a bit of an interesting one because I think the project was originally slated to be rental, and so it would be unusual for a developer to be able to test the market in a condo format in this way. But it looks like it was originally going to be rental. So now they're going for market. They're testing the waters. They probably don't have a pre-sale test, which is why they're able to do this without having to worry about, that clock ticking. Building's almost finished. It's going to be ready in the fall. And so I think, again, it's an anomaly launch.
Right.
Yeah, they want to make sure they nail the prices before they commit, drive the momentum.
Totally. Now, homes are expected to be move-in ready in November with pricing starting in the high 300s. Similar to Diverse's other Abbotsford developments, the project will feature the developer's signature enclosed balconies, so the solariums. They were really popular in the past, and it's a differentiating feature within this submarket.
Yeah, so this limited release approach is less common for wood frame product, though, which typically comes to market with a larger share of homes, if not all the homes being released up front. So 10 is surprising. So Auburn shows how developers are becoming more strategic in the current environment. They're using a smaller first release to test the waters, gauge buyer interest, build momentum around a nearly move-in ready product at an attractive price point before they bring forward the balance of their homes to market.
Yeah, exactly. And the real story will likely unfold in September. While some projects may be lining up for fall launches, there's still a sense across the industry that we may need another year or so away from being into a place where we've got some meaningful urgency within the marketplace. Now, as a result, developers will likely continue to take a cautious approach and hold back launches where possible. For those that do not move forward, pricing will remain a key factor in attracting buyers, and we'll see, more small, sharply priced initial releases as developers test the market and try to gain a better understanding of where the market demand currently sits.
Yeah, that's a really good point. And a key indicator to watch will be movement in the resale market, particularly whether inventory continues to build or begins to stabilize. Now, the July numbers will be telling. Do we see a meaningful shift in market conditions across Greater Vancouver and the Fraser Valley, or are we still seeing cautious buyer behavior and elevated supply levels?
Yeah, well, I love jumping into the resale stats. Alan, the buyers were even more cautious in July. While there were signs of momentum building last month, that did not carry into July, with sales declining nearly 14% month over month in Greater Vancouver. Now, the Greater Vancouver Real Estate Board described the market over the past few years as one step forward and one step back. And July was another example of that pattern. So really nothing has shifted.
Yeah, that makes sense. And how about the Fraser Valley?
Yeah, it was a similar story. The Fraser Valley recorded just under 1,100 sales, down about 5% from June and roughly 9% below last year. The board's headline said it well: improving affordability continues to outpace the buyer demand. I mean, they wanted to hit affordability. That's obviously clearly happening, but there's unintended consequences with that too.
Yeah, absolutely. And I mean, summer tends to amplify the conditions that we have already been seeing. So with remaining inventory elevated, buyers having plenty of choice, there's little sense of urgency to act. So many are happy to just, enjoy your summer plans, knowing there's still going to be options when they're finally ready in the fall.
Yeah, totally. And what about the supply side? Last month, the story was sellers starting to pull back.
Yeah, that trend picked up speed in July, and it is now showing up in the standing inventory. Active listings fell about 3% month over month in both regions, and both are sitting below last year's levels. Now, new listings tell the same story. Greater Vancouver's were down about 12% year over year, led by a sharp drop in the apartment listings, and the Fraser Valleys were down nearly 18%. The summer slowdown appears to be affecting sellers as much as the buyers.
Everyone wants a vacation.
I know.
Yeah, no kidding.
It's a little smoky out there for vacations, but it is a great time of the year to have them.
That's right. So demand and supply are retreating at the same time. So what does that do to the balance of the market?
Well, it keeps things pretty stable. So even with inventory drifting lower, both regions still hold well above their 10-year seasonal norm, so buyers continue to have plenty of choice. The sales to active listing ratio tells you where each market sits. So Greater Vancouver is at 13%, hovering right around balanced territory, while the Fraser Valley is at 11%, which keeps it firmly in a buyer's market.
What has this meant for pricing?
Yeah, pricing edged lower across the board. Greater Vancouver's composite benchmark slipped about 1% from June and sits just over 6% below last year. The board's economist noted that with sales in a holding pattern, there is no significant price pressure in either direction. Now, the Fraser Valley continued its gradual slide, down just under 1% from June and just over 7% year over year, with apartments seeing the steepest annual decline of any segment.
So the price story is really unchanged, right? A slow drift lower rather than a correction, with the Fraser Valley softening a touch faster than Greater Vancouver is. Should we jump into the rental market, Alan?
Yeah, let's do it.
Ash, you're picking up pretty quickly here. You've already got the format completely down. You must have watched an episode or two, I'm assuming. It's also probably why you're a pro. You're like, what not to do? So you are showing up great. Now, Alan, what did the rental market deliver in July?
Yeah, let's dive into it. July saw fewer purpose-built rental completions than anticipated, with 4 projects completing and adding approximately 450 homes to the market. Some of the projects originally expected to complete in July are now likely to roll into August and September, which should result in a stronger delivery pipeline over the coming month. Now, the geography is the interesting part of this month. The North Shore carried the bulk of the new supply, with 2 north of Vancouver buildings making up more than half the units. The rest was split between a concrete completion on the west side of Vancouver and a wood frame building on the east side.
Yeah. And so, Alan, is a 6% first month lease rate something that we should be concerned about?
Well, I'm glad you asked, but on its own, no. But first month numbers are always lumpy. Most of these buildings only open their doors partway through the month, so lease up to date built over the first several months rather than the first several weeks. Because renters have real choice and landlords are competing with incentives, it is also worth noting that rental projects typically do not come to market with significant leasing success messaging, particularly in the early stages of lease up. Now, of the 4 projects completed in July, 2 had only 1 month of pre-leasing activity and 1 had 2 months of pre-leasing prior to completion, meaning initial leasing performance may not yet fully reflect the long-term absorption trajectory of these projects.
Yeah, that does make sense. Now, what should we expect for August?
Yes, August is shaping up to be the biggest rental delivery month in terms of completed units in the year. 4 projects are expected to complete, bringing roughly 864 homes to market. And this wave is concrete-led, with 2 large concrete towers on Vancouver's west side making up the majority of the units. Now, that is a lot of supply landing on one submarket all at once. The thing to watch for now is how quickly those homes are absorbed and whether the competition pushes incentives even higher across the west side heading into the fall. Ashley, what do you think of that?
Yeah, I mean, if the rental market follows the for sale market, it's going to be highly competitive. I think going into the fall, renters are going to have even more choice than they already have had, especially anyone looking at newer concrete product or close to downtown. I think we can expect to see an aggressive market.
Yeah, absolutely. And the next few months will be an important test for the rental market. With more new concrete products coming online, particularly in central locations, we may see a clearer separation between projects that are able to capture demand quickly and those that require more time or strategic adjustments. Increased choice put more pressure on asking rents, incentives, and lease-up timeline as the market works through this new supply.
Yeah, and this is expected to provide some relief for renters by easing rental rate pressures that we've seen. Now, additionally, as condo starts slow, as highlighted in our macro update, renters who are considering entering the ownership market will have more options available and may have greater flexibility to delay their purchase decisions as well.
Yes, so speaking of rental rates, let's now turn to our rental tracker, which provides insight into achieved rental rates across recently completed purpose-built rental apartments and investor-owned rental condominiums that have delivered over the past 5 years throughout the region.
Awesome. Well, let me geek on the numbers. So average rents across the track submarkets landed at $2,694 in July, up slightly from June. Rental rates per square foot firmed as a touch as well, coming in at $3.94. Now that makes 2 months in a row now of asking rents holding firmer than the amount of new supply would suggest. Now landlords are still leading with incentives, things like free month and moving in credits, rather than cutting the face rent.
And what is happening underneath the average at the submarket level?
Yeah, that's a really good question. Now, zooming out first, rents across the tract markets remain relatively stable, increasing 1.8% year over year, while declining 0.7% over the past 6 months. Now, this suggests July's improvement reflects a period of stabilization rather than the beginning of a sustained upward trend. At the top of the leaderboard, downtown Vancouver holds the highest average rents again this month at just under $3,300, with Vancouver's west side close behind.
3,300. I mean, it definitely feels like that is come down, right? Like we see South Story 3,300 for some of our penthouse units as well. Are there any outliers that really stand out to you, Alan?
Over the past 6 months, rental rates have declined across most submarkets, now with Richmond experiencing the largest increase, though it is likely influenced by listing composition, as changes in the availability and mix of units tracked can impact average rents, rather than necessarily indicating broad-based rental rate growth. The shift worth calling out is in the middle of the table. Now, Coquitlam outpaced East Vancouver on average rent this month at nearly $2,700, compared with East Vancouver's at just under $2,500. This does not happen often and speaks to how East Vancouver has seen more project completions entering the market over the past few months, increasing competition among rental offerings and contributing to Greater Vancouver pricing pressure, with the submarket posting the largest rent decline in the tracker.
Well, now that we've shared that, maybe more people will be looking at East Van.
Yeah.
Seems
There's
like
a
it's
deal.
good
There's a deal to be
The
had.
delta is not that
Yeah.
great between Coquitlam and East Van, I think.
Not anymore. And where else would we say that the softness is really concentrated?
Vancouver West has posted one of the largest declines over the past 3 months, coinciding with a wave of new rental completions in the area. As more supply completes for the same renter pool, increased choices has added pressure to asking rents.
I think there's also the expectation of what's following. Like everyone knows all this concrete coming and people are trying to get ahead of it.
Yeah, so renters are, the practical takeaway is choice. More buildings competing for your business means better incentives, even if the advertised rent has not moved too much. There's usually some more juice to be squeezed there.
Totally. It's not exactly rocket science. The market is still tilting in the renter's favor, but through incentives and choice rather than falling rents.
All right, Alan, Ash, on that note, it feels like the right place to wrap up this month's episode of the Presale Pulse. Now, Ash, thanks for joining us. First full episode. Great to have you ongoing as well. It's great to have you join the Pulse team.
Yes, I mean, I've always admired what you do, but happy to be here. Hopefully I get the invite back. But thanks for having me, guys. There was so much to dig into and looking forward to next month.
Yeah, and thanks, that's right. And hit the subscribe so you do not miss the next episode, and check out our newswire for the daily real estate roundup. Thanks for tuning in. See you in September.